Hi, my name is Jinha from Macquarie University, and today this presentation will examine the CPI analysis of recent inflation trends in Australia on the housing market, specifically focusing on the prices of new dwellings and residential rents. So, one of the main problems in businesses is rising inflation in Australia, which is being driven in large part by housing costs and rent increases. The overall CPI increased by 0.9% in that quarter and 2.4% over the year, which housing being the largest contributor to this rise, with the rent being the notable drivers. These data sets were provided by Australian Bureau of Statistics Consumer Price Index for March 2025. So here, the new dwellings, the data shows that the market for new homes is actually cooling. Nationally, prices fell by 0.4% in the March 2025 quarter and rose by just 1.4% over the year, which shows the slowest growth since mid 2021. The line graph clearly shows a decline starting in late 2024, and when we look at the data by city through pivot tables, there are the strong contrast. Perth saw a 10.1% increase in new dwelling prices, showing high demand or limited supply, while Melbourne and Canberra recorded annual declines of 1.3 and 1.7%, which shows Sydney remained flat. And this tells us that some cities are still booming while others face oversupply or soft demand. And these patterns highlight where developers might face pricing pressure and where there's still room for market growth. So turning to rents, we see a similar story, and rent inflation is still high but easing. Rents rose 1.2% in the March quarter and 5.5% over the year. And the line chart shows a clear slowdown from the peak of 2022. And when broken down by city, Perth again shows the highest rent inflation at 8.9%, reflecting tight vacancy rates. And Brisbane, Adelaide, Melbourne, and Sydney sit around 5.6 to 5.8%. And in contrast, Hobart showed a small decline of 1.3%, and Canberra saw only a 0.6% increase. And the conditional formatting highlights Perth as a clear hotspot. And this takeaway is that although rent pressures are widespread, the intensity really depends on the location, with strong demand still driving growth in Western Australia and Queensland, while weaker demand or oversupply is keeping prices down in places like Hobart and Canberra. So, zooming out on the overall CPI trends, the inflation rate in Australia has gone through a notable shift over the past 2 years. It peaked at around 7.7 to 8% in late 2022, but has since eased down. And of March 2025, annual inflation is down to 2.4%. The line graph shows this very clearly, and the 0.9% increase in the first quarter of 2025 is modest but still significant. And housing costs, including rents and new dwellings, have played a major role in both the earlier surge and the recent slowdown. Falling new dwelling prices and slower rent growth have helped bring overall inflation down, and these other factors like changes in rent assistance and energy rebates have also influenced inflation in recent quarters. So while the inflation peak has passed, housing remains one of the biggest contributors to CPI. To better understand these patterns, we can apply two economic frameworks. First, supply and demand, when demand for housing driven by things like migration and investment, it exceeds supply, prices rise. That's when clearly the case in cities like Perth and Brisbane. And in contrast, places like Canberra and Melbourne show signs of excessive supply or weakened demand, reflected in falling or flat prices. And second, the consumer and producer choice framework explains how people and businesses respond to these changes. And for example, consumers might delay buying a home or downsize in response to higher housing costs, and builders and landlords, meanwhile, adjust pricing strategies or offer incentives when demand slows. And these frameworks help explain why prices have behaved differently across markets. And this analysis offers valuable insights for business and government decision making. Because for large companies, high housing costs can affect employees' well-being and location decisions. So may need to offer higher salaries, allow more remote work, or rethink office locations. And property developers can use this data to identify cities with growth potential like Perth, or take a cautious approach in places like Melbourne. And policymakers might respond to these pressures by increasing housing supply or adjusting supply programs like rent assistance. And understanding where inflation is easing and where it's still strong helps both businesses and government plans better to allocate resources more effectively and adapt to challenging economic conditions. So through this project, I've demonstrated key employability skills that are still valuable in any business roles. So using tools like pivot tables, conditional formatting, and charting, I translated complex data sets into clear insights, and by applying economic theory, I interpreted these trends and explained the real world implications. So finally, by communicating this information clearly and logically, I've shown how data analysis can inform better business decisions. And these skills are highly relevant in roles across business analytics, consulting, policy, and beyond. And they've helped me better understand how to use data to solve meaningful problems.